Happy Sunday, everybody. It's Hammer time. Thank you, Mr. Jeff Hammer. Appreciate you. You're incredible. Thank you, Mr. Jeff Hammer. Appreciate you. Got the audio working. Good. We have a big show today. Top questions from the week. And people are concerned about the right things. And there's a ton of questions about risk. So we're going to be answering my favorite altcoin today. What's it going to be? With the exception of a few obvious ones. We're going to talk about proof of stake, merge risks, some of the weird stuff that's happening, and things we need to be aware of. Might be very minute risks, but we'll see. We're going to look at Lido and staking risks. We're going to look at Grayscale Bitcoin Trust, my risk reward matrix that I put together. What does it take to have a killer Dapp today? And so much more. So big thank you. Let's just jump in. As usual, this is Edutainment, never financial advice. So the first question is from MT. It's a Bitcoin question. And if every mined Bitcoin was in cold storage, could futures still be traded? Interesting one. So I did touch on this chart the other day. And if every mined Bitcoin were placed into cold storage, that would be a true supply shock, which means it would cause the supply Bitcoin left to be traded to go to zero. Or would it cause the price to go to infinity? That is the theoretical question. But by the laws of supply and demand, when there is no supply and the demand remains constant, the price will go to infinity. Now, in the real world, however, it's important to note that it is very unlikely because there's always going to be supply to meet the demand. First, miners have to pay for electricity and their bills and their rigs and their people and their infrastructure, etc. So they have to sell some portion of their mined Bitcoin to pay for it. Second, the supply, if it gets to a certain point, there's always a price at which people sell. That's the next slide. I'll touch on that real brief. But using on-chain analysis, you can see the age of the coins and the realized value. And we can see that even long-term holders have a price they'd be willing to sell at. Now, in terms of your question regarding would there be a futures market? Of course there would, because things will always be sold and things always have a price and people will always have bets and people always need futures markets to hedge their risk. That's the main purpose of those tools. But remember, the most important thing is everyone has a price. And this is, unfortunately, from Pablo Escobar, but it was a wise phrase. Everyone has a price. The important thing is to find out what it is. And I used to work with people that sold stuff like cars and things like that. There's a buyer for every item. You just have to wait to find them and, see what the price is. So great question, but do not worry about that. Next question is, what is the risk reward potential for ETH after the merge to proof of stake from Ronaldo? Now, this is a double barrel question, and this will bleed into the next question next. But first of all, there are some positives. So the rewards of proof of stake, first of all, you've got the ESG narrative. The merge will make the Ethereum network much more energy efficient. And with the energy consumption declining by over 99%, Ethereum will truly be able to counter any energy FUD, ESG FUD, because POS uses very little energy. Now, the other big thing is deflationary, like we discussed last year with EIP 1559. The merge will also make Ethereum less inflationary and possibly even deflationary. Now, the issuance of Ether will decline by approximately 90%. As with the lower operational costs of the validator, lower rewards will suffice. Further, staking coins will be reduced, the number of coins in circulation, which should also drive up the price action. And finally, proof of stake is better for Ethereum. By switching to proof of stake, Ethereum has a lot more opportunities to scale, and it also means Ethereum doesn't need to compete in the same lane as Bitcoin as a proof of work chain. Now, this all neatly ties into the next question, which is the implications of Tornado Cash on proof of stake. So this one came in from Slane. What are your thoughts on the Tornado Cash incident and the OFAC-compliance pressure on ETH and the implications, especially under proof of stake? So this question alone could become a whole video. I know a lot of people talk about it to great depth, but we'll just drill into what we see as the main risks. So first of all, the 400-pound gorilla is risk, and the risk for the Ethereum merge is Tornado Cash. This is a huge one, and we don't yet know where it's going or how it's going to play out over the coming months or years. Now, Tornado Cash has major implication that could derail Ethereum when it comes to proof of stake And the outcome of this incident will reveal a lot about the future of Ethereum. Now, just a little bit of background as well. Tornado Cash is an open source decentralized mixing protocol built on Ethereum. And this protocol was used to obfuscate the history of tokens on Ethereum by mixing tokens together to ensure privacy. If anybody missed that, that's basically what it is. And since this protocol is so good at making the source of funds unidentifiable, it's been used by nefarious groups, for example, North Korean government, etc., and other organizations that are frowned upon by the US government. And the US government, through OFAC, recently sanctioned Tornado Cash, the protocol, its developers, and anyone that interacts with Tornado Cash, and any platform that facilitates the movement of Tornado Cash tainted coins and the code itself. This has extremely wide implications, ladies and gentlemen. This one is very, very important to note. If you look at this little screenshot here, you will see the Tornado Cash crackdown is an attack on speech and privacy. For the first time ever, the Treasury Department has sanctioned not a person or a group, but a digital tool and all who use it. So this is history, everybody. We're living through history right now. And the layers of ramifications are stunning. You know, people said way back when, the big talk in 2021, well, the US government can't ban Bitcoin because it's code, and code is freedom of speech. Well, that all just changed right now. I'm not trying to alarm anybody, but this sanction is a game changer. And it does have impact on First Amendment ramifications. There's going to be many court battles on this aspect alone. So it'll be extremely interesting to watch. Also, there's a lot of inherent risk by watching what happens next, because untangling everything out there could be a real problem. So for example, if a token is passed through Tornado Cash, goes onto something like Uniswap, gets placed in the liquidity pool, and then gets lent out in Aave, and gets locked in as collateral, etc. How do you know what is where, etc.? And you can effectively argue that all of the projects are in violation of the sanction, as they are all facilitating the movement of tainted coins, and therefore they are not taking the necessary steps to prevent tainted tokens from passing through their protocol, which is a big, scary issue. But let's dig a little deeper. It does get worse, unfortunately. Centralized entities like Binance, Coinbase, Circle, Lido, etc. are all trying to figure out how to comply with this sanction, and they're looking at censoring any ERC20 addresses that have interacted with Tornado Cash. And the problem is many of these centralized entities are already on the beacon chain, responsible for the health and the security of Ethereum post-merge. And this is why so many people are kind of worried about this now. It's like a big wake-up moment. Now, there are billions of dollars of customers staked money on ETH 2.0, all of which they cannot unlock until after ETH moves fully to ETH 2.0. And according to Dune, at least 66% of the beacon chain validators are big exchanges or centralized entities owned by the likes of Binance, Coinbase, Bitcoin Suisse, AG, etc. Sorry, I dropped my clicker for the first time ever. Interesting. So anyway, let's go a little bit further. This is a third dimension to this whole story and why it is so fascinating. So according to Vitalik, he wants to burn the staked Ethereum of sanction-complying validators. So he's stuck between a rock and a hard place, and he did vote the affirmative on a Twitter poll from I can't remember his name, but the problem is validators are not supposed to engage in picking favorites, picking which address gets priority and which address gets banned. If these centralized entities comply with the sanction, they must do exactly that, because they have to censor addresses to comply with the sanction. And by doing that, they would completely undermine Ethereum as a cryptocurrency. And this is a huge existential threat to Ethereum. And it's such a threat that recently Vitalik did say he would slash the stake of any validator that censors the Ethereum address. And remember, he is also exposed to sanction violations. They carry some serious jail time. I think it's 30 years, etc. So this could put Ethereum and Vitalik in a very, very tough spot as they go forward. So again, very interesting to play out. But there's one other angle too. This is just the beginning. So this is tinfoil hat time, everybody. And again, only the paranoid survive. Remember that. So Vitalik tweeted way back when, this below, I won't even read it because I don't want to wrinkle any feathers out there, or rustle any feathers. But Vitalik's threat to these big exchanges and CeFi entities is effectively telling them not to comply with US sanctions. And the action alone could be defying US sanctions. Could we see Vitalik himself be sanctioned? Maybe. And he is, after all, a Russian national with a connection to Putin. And granted, Vitalik is not supportive of the invasion of Ukraine, but he's in a very tough spot. And if he goes through with the slashing, we might end up seeing Vitalik on the sanction list. Again, tinfoil hat time. I did warn you all not to rustle any feathers. Sometimes if you say things on the internet, you do upset a lot of people. But again, it's important to be very, very, very paranoid and vigilant in these times. So that was a banger of a question. That's our point of view. We got to watch it carefully. I think there's only a 1% chance or less of this type of stuff happening. But again, very scary times. And the US government has a big reach. So next question is from Bianca C. Could you tell me how safe Lido staking is? And would you stake your ETH and what percentage of your bag? So I can't say what to do. I can say what I do. And I stake nothing on Lido right now or ever have. So big zero for me on that one. Now, in terms of things to consider with Lido Stako is I don't put any significant percentage of my portfolio into yield farming or staking. So the percentage of my bag is 0. Now, Lido is a decentralized staking protocol that allows you to easily stake your tokens and earn the staking rewards, and allows you to stake ETH on ETH 2.0 and earn passive income. But typically you need at least 32 ETH in order to set up your own validator, but to stake ETH. But with Lido, you don't need that at all. So it makes it very, very easy. But there are a couple of things to consider. First of all, risks. There are many depending on the type of platform and specific protocol you are using. For example, staking ETH, SOL, etc. You have to consider the smart contract risks, as these contracts are not perfect and they can have bugs or get hacked and you can lose your funds. It's probably the safest just to directly stake your crypto on the protocol with a validator. And this produces more reward and it's less risky. Second, returns. If you are chasing yields, you are generally better off yield farming lending protocols or providing liquidity to AMMs rather than staking. And third, you cannot unstake ETH right now. And the thing with staking ETH is you have to wait until we get to ETH 2.0, until it's fully out. And this is also a concern that I typically have. I don't like locking my stuff up. I like to be in control of my destiny. And that's why, I always said, back in videos back in March 2021, I don't get out of bed for 6%. But there's another thing with Lido as well, not just the staking, but in terms of the inflation of the token. If people are looking at the token, I thought we'd insert that here as well. If we looked at the Lido supply, back in July 2021, there was about 24.53 million tokens. Today, it's 312 million. So Lido itself as a token does have a lot of inflation. And there's another risk as well to be cognizant of, and that is the staking, the staked asset, stXYZ. It could be stETH, stSol, etc. It does come with its risks. I won't show you the staked ETH chart because it has a lot of depegging lines on it. This is the correlation in the blue box below, and this is staked Solana, and you can see it did lose its peg back at the beginning of May 2022. So again, the user risk is not only the exchange price of the staked asset, whatever it is, which is lower than the inherent value due to withdrawal restrictions on Lido, making arbitrage and risk-free market making impossible. So again, just another thing to consider as you go forward. Finally, again, this is a risk show. When you stake the token on the L1 protocol, you're basically providing more security to the network. And if you already believe in the protocol enough to hold the token, then staking the token on the L1 isn't going to incur much more additional risk. Now, the reason is if the security of the protocol is compromised, then the token value will be compromised as well, and vice versa. And the problem with Lido is it takes more time to pull your assets off. And of course, you also get less reward. But the trade-off is you don't need to worry about running your own validator. Now, if you believe in the protocol long-term, then staking might be a good option, but you never know what's going to happen in the cryptoverse. Therefore, I always say, keep your tap dancing shoes on. And remember, if the ship is going to go down, the passengers get life rafts while the captain goes down with the ship. when you stake, you're essentially electing to be captains rather than passengers. And that's the big takeaway here. So again, take all of that as you will and make your own decisions. So next question from JMP. Do you think Solana will need a killer app that will set it apart from all other blockchain projects? And to reach the next level, it will need a stronger value proposition other than NFTs, cheaper and more efficient than ETH, etc. Bitcoin, for example, is considered digital gold. What do you think will be Solana's value proposition? So good question and a couple of thoughts there. So first of all, we believe kind of the need for a killer app would be along the following lines. Solana's value prop is simply better, cheaper, faster than anything else out there. The ecosystem is very nascent. If you rewind the clock 13 months ago, 14 months ago, there was nothing happening on the network. You look at it today, it's the busiest chain out there. So, but when you look at TVL, it's where they really fall down. The TVL is only 1 billion compared to Ethereum, 35 billion. Granted, Ethereum does trade at 15 times the market cap. But if you look at other metrics, it's a different story. Anyway, I'm not going to get into that here, but we do believe the killer Dapp will be something DeFi related, like a one-stop shop for banking, trading, shopping, NFT, staking, identity. That should be identity, not identify, and perhaps even gaming. And there are some plays already that have the cornerstone of that already built, like Radium, Serum, Saber, Solend, Magic Eden, allow you to do a whole bunch of stuff very quickly, cheaply, easily, fastly, using the same type of wallet infrastructure, the same identity infrastructure, and do things very quickly. So I think part of it's there, and I always talk about the importance of integration across apps and a similar user interface to make people feel very comfortable and secure. And I think they have the building blocks of that. So the other thing as well, just to mention as well, the killer app, maybe the killer feature or the true value proposition of Solana is really its proof of history consensus mechanism. And POH uses a sequence of computational steps that determine the time passage between two events cryptographically. Now, the type of order sequencing is pivotally what separates it from Ethereum and allows it to process 50,000 transactions per second up to 700,000 transactions per second. And the golden number, as I always say, is 1 million TPS. That's where you need to be able to run something like a stock exchange on a blockchain. Now, in addition, Solana is much less expensive and less bloated than Ethereum. And Ethereum's gas fees can run hundreds of dollars, whereas Solana's fees are fractions of pennies. So that's kind of how they're getting so much adoption right now as well. The other key technological difference between Ethereum stateful architecture versus Solana's stateless architecture is the stateful, meaning that all the transactions on the network are recorded into one state. And if any new transaction occurs, then the entire network must update their copy of the state machine. That's why L2s overcome that and they can operate much cheaper, much faster. And in contrast, Solana is stateless. Each node in the network doesn't keep a copy of the entire transaction history, but rather a validation of the transaction sequentiality. And this means Solana is infinitely more scalable and requires much less memory consumption. But the hardware to run a validator, of course, is very expensive as well. But that is kind of the core difference. And that's what we believe also could be the key value prop of Solana as we go forward. And that's why, there's a lot of dreams of ETH 2.0 having infinite scalability, but that's not going to happen for a long time until they get sharding, and who knows when that will be. So next question. This is from Shiba Godzilla. If you inherited $100,000, but were told you had to invest it all in the next 24 hours in one crypto, but not Bitcoin, ETH, or Solana, which one would you pick and why? So this is kind of like a gun to the head, not financial advice question. So again, very clearly, this is not financial advice, but based on our models, our interpretation of the market. So I would basically choose Polygon MATIC. And let me explain the reasons why. First of all, we've built models to look at both risk and reward. Not necessarily the token with the most upside, but also the most upside balanced with the least amount of downside as well, which is very important. So from our crypto compendium, MATIC scores top 6 of all the top 20 smart contract platforms. The smart contract platform score is in the top 3 after Sol and ETH. And the combined score is in the top 3 as well. So it has the lowest risk. It has extremely high adoption, very solid daily active users, especially considering all of the stuff that's happened in this crypto winter. It has ZK rollup functionality, and the move of Ethereum to proof of stake will not negate the need for L2s at all by any stretch. Let's look at the chart real quick. So people will ask, well, what is a magical entry price? I already saw that in the chat. So we believe, if you look at the chart here going back the last, you can see down around the 60 cent level is a pretty solid historical support level. The red line, as usual, is the 50-day moving average. The blue line is the 200-day moving average. The 200-day is about $1.08. And the 50-day moving average is exactly what it just bounced off yesterday. So that's where we are, ladies and gentlemen. If you can buy, I put the blue support line in there as well. That's about 65, 66 cents. That's a very killer entry in our opinion. Not financial advice. Currently it's trading about 80 cents. So that is MATIC, and that's why we like it. And I do believe it will probably outperform Ethereum as we go forward. Again, it runs Ethereum indirectly, in my opinion. So next question is from Nabel. There's negative sentiment about GBTC lately, and many of us have large positions that are down. If you have a 5 to 10 year horizon for Bitcoin, is there any reason to worry or move to a different horse? It's difficult to move to real Bitcoin, or I would have done so instead, splitting it between GBTC and MSTR. So this is a great question, and I think about this all the time as well. So first of all, there's a second question to this. So everybody's worried about GBTC all at the same time. So this is from Gizmo FX. Update and status of GBTC and future outlook. Is Grayscale going to be mired and legal with SEC, similar to XRP, holding it back, even if other ETFs are approved? For example, BlackRock, if they get approved, would it provide a smoother pathway for Grayscale? So a lot to unpack here in two things, but I'm going to show you a framework of how I think about all investments that you can use yourself. So first of all, there are some concerns, and the following are definitely true with Grayscale. So it seems like Sun and Shine and the Grayscale crew are not liked by the SEC. They could face 4 years of litigation, as correctly pointed out. Think of XRP and the headache with the SEC, and that is a distraction. That is time and money that prevents new investors coming into the actual asset, etc. And it's also very apparent that Grayscale doesn't have deep Wall Street connections like BlackRock do. Also, there have been multiple spot ETF rejections, and BlackRock in on the game. I'm sure they will get a spot ETF approved first at this stage after all that's happened. But if one spot ETF gets approved, others will follow. And it's only a matter of time. But how much time do we have to wait before a spot ETF is approved? So it's going to happen. We just don't know when. So next question is look at the discount. Discount right now, August 19th, which was the Friday close of business, 32.51%. Basically, 33% is as bad as it gets for this particular discount. It's been through hell and back. And, we don't even talk about the 3AC bet that went sideways. It caused a big part of 3AC to fall down as well. But what I put together is a risk-reward continuum. This is why I frame up things. And after we do this, we'll allocate some percentages to the actual risk. And again, for any asset you make, everybody should do this. When you invest, do your homework, do your research, put these frameworks together, build out a spreadsheet, and add little percentage risk items to it. So for example, this one for GBTC, these are the risks on the left that I see in red. So I'll start with some of the threats, kind of not really big risks, but the 2% fee for the next 15 years, imagine you got to pay 2% for the next 15 years. Well, don't worry, because that's pretty much covered with the 32% discount. Okay, so that's not really a concern, but it's worth pointing out. Maybe GBTC will trade at a perpetual discount. It'll be at 30% off forever. Who knows? But that's also risk. So it won't dissipate, but you won't lose, but you won't make the 30% arbitrage gain you thought you would. Number 3, BlackRock coming in. If BlackRock do come in with their spot ETF first, that could eat a lot of the funds. People could sell and move to BlackRock, but they'd probably hold, because there's no point in selling something at 30% off and buying something that is a spot ETF. And then some of the more concerns, the deeper we get into the red, the higher the risk, but the less probability. So for example, Grayscale could get fines for market manipulation. There's some talk of that. That's also apparently the reason why they got rejected for a spot ETF as well, because they believe they're working in cahoots with maybe 3 Arrows Capital and others to manipulate markets for Bitcoin. There could also be the 4 years of litigation, because remember, Grayscale has gone after the SEC. And heaven forbid, out in the far left, the fund, as I say, is not fungible. And what this means is maybe they don't have all the Bitcoin they say they have. I think that's highly, highly unlikely, like less than 0.5% chance or even less. But even taking that all into account, what is the reward? This is the green stuff on the right. So you get 32.5% off. Very good. It's an easy on-ramp for many. Many people can't buy Bitcoin directly in retirement accounts, etc. And one Bitcoin only costs $14,000 if you buy it through GBTC. So these are all rewards. Now, what does this all mean in terms of a matrix? This is the matrix I want you guys to put together for yourselves. So place your own odds of the actual risk. So imagine you invest $100,000 and you got your risk of total loss. Throw in there minus 0.5%. You got your perpetual discount, say 10%. 32% discount. That's the value you get right now. There's an 80% chance that that will actually work out over time, but you may have to wait that 3 to 5 years. Then there's legislative loss, 4%, minus 4%, fines, minus 1%. If you calculate it, this is rough back of the napkin for me. You calculate the expected value of 100,000 investment, assuming all this risk and the potential discounts and the relative probabilities, you get 84,500. So that 84,500 is still better than buying Bitcoin directly if you assume the 32.5% discount. So that's what I need you to do at home. Build this little framework yourself, add the probabilities. Maybe you think, wow, well, the legislative process could last for 4 years, could cost a lot of money. The discount could get bigger. I could lose more. Who knows what's going to happen? But plug it all in here and then calculate the EV. And then it'll tell you if it's a good investment or not. So right now, I wouldn't throw in the towel, but I would hold tight. And I think it's very unlikely. I did forecast that I believed GBTC would be approved for a spot ETF in 2022. That didn't happen. I don't think it's going to happen this year, looking at the wording that came back from the SEC. And also the fact that Grayscale went and sued them. That's not going to make them very popular at all. So good question. Next question is from Captain Eddie. So, I was all cash year-end 2019 waiting for the C19 crash. The day it hit, I locked my Alpha store and went nuts on SLs. You said this. Yeah, I did. Could you please tell us about your greatest trades? It's Edutainment. So, let's go back in history. So, there's a slight correction to what I may have said here. I was all cash at the end of 2019 for different reasons. I thought the market was getting very toppy, and I thought there'd be some other black swan event happening, which didn't happen, which along the lines of a financial crisis. It didn't happen at all. But at the same time, there was a couple of things that were going on. First of all, I had a friend in San Francisco whose sister was in Wuhan, so I was lucky to get the inside scoop on what was going on in December 2019. And I was in cash for different reasons at the end of 2019, but this made me obsessed with what was going with this novel C in Wuhan. Now, I was building mind maps. I built about 6 very elaborate mind maps about C19 back in January, February, March, April 2020. And I knew more about this thing than anybody would care to, because I thought the more I dug into it, the more I thought this could really, really rattle the world. And as it did, as it turns out, it did rattle the world in a big way. It changed everything all across the board. So I was watching this very carefully and studying it very carefully. And the timeline was this. So another really interesting thing, I'll zoom out for this in a second, but Bitcoin bottomed late night on the 12th of March, 2020. I know, because I was awake and I was looking at the markets. But what's interesting about that time, it was like 10, 11 p.m. It bottomed Pacific time, I recall. I could be wrong with the hours, but it was close to midnight anyway. And I was like, wow, so somebody's dumping the hell out of Bitcoin. Is Bitcoin a precursor to what traditional markets will do? And the answer is yes. In fact, it's very early. It's like the canary in the mine. So it was fascinating to see that I believe Asia dumped well before Western stock markets. They were dumping Bitcoin well before because they knew the impact of this. Like I was doing my homework, they were too. And that's why on the 12th of March, it really tanked. But the stocks did not bottom until the 18th of March, 2020, 6 days later. And remember, and I bought heavy on Wednesday the 18th, obviously in the West Coast. Stock markets closed at 1 p.m. So it wasn't the whole day. It was just, early morning till, let's say, lunchtime, basically. But I got more Tesla. I bought Google Square Shop Trade Desk, and I bought all leaps, all option plays, and they're all funded by selling puts. So that's what I did. It was kind of crazy. Moved a lot of cash, but it was weird, just the timing. And if you look carefully back at these days, I mean, I think it was Square, Tesla, all these things tanked really hard. Square fell down to like $31 or $32. And that was during the day on the 18th. By the close of business, it was back above 40. So it was like a V-shaped recovery during the day. Like you've never seen, like the stock will lose 25% of its value and rebound, all of it in hours. So it was magnificent to see. And the TA was insane that day as well. But the big point, the big lesson for everybody here is, and this is what I've taken with me all my life, not only to wait for these type of events, but go in hard when they do happen. You don't always get your timing right, but when you do, it really does pay off a lot. So for example, everybody, the lesson today is when investing, know your macroeconomics. Repeat after me. Watch what's going on in the world. You don't get these black swans very often, but if you can be ahead of them and prepare, it can pay off greatly. So next question. This is from Peter S. Why do your subscription numbers never seem to rise above 443,000 when there's no better KPM on the YouTube? Thank you, Peter. And again, these are all real questions. I don't make these up. These are just fed. But first of all, 4 reasons. And I think actually it hit, let me check now. It's 444,000. So the question might be a few days old. I rarely ask for subscriptions. I assume if you like the content, you know what to do. I assume people have the IQ to be able to say, okay, this guy has interesting things to say. I'm going to subscribe to his channel to get his videos. Second, YouTube has a large number of scammers that we actively remove. I pay for a software service that removes them as well. Third, I'm not interested in collecting trolls in my audience for the sake of high subs. And trolls are people that pump coins, tokens, etc. Scams, they're there. And it's very much like Twitter, a lot of fake accounts. And fourth, and finally, any disrespect to others in the chat or comments is not tolerated. Anybody who is fighting, etc. So we counted between 100 and 300 people a day from the channel. And that's as many as 10,000 a month. And that's why we're stagnant. But I don't care if it's 40,000 subs or 400. I want a good, tight, respectful community. And that's it. So we work diligently on making sure things are harmonious. So if you want to stay, don't insult your neighbor. So next segment, our donation is my favorite part of the week. And a shout out to our Patreon member, GBTC, whose sister helps run Lone Star Transport for Dogs. Thank you for all you do and help to rescue our furry friends. In addition, we sponsored Calvin and Caboodle from Best Friends. So that's the KPM for today. Thank you so much, everybody. Now let's switch to some questions. Live Q&A time. So, and a big thank you as well to the moderators and chats and all the people who give super chats. Really appreciate you all. So, Mark Hyde, what would be a realistic all-time high price for Solana in the next bull market? Interesting question. So I remember I was doing price prediction models for Solana back in April 2021. And this is embarrassing because my 2023 price target was 250. And we hit 260 in 2021, which was ridiculous back in October, November. So it ran too far, too fast. But these things can happen. So I would not, it's hard to be so bullish right now when things are so down. But we saw literally Solana, we were buying Solana for $20, $22 in June 2021, and I shot to 260. So that's a 13x in 20 weeks or less. So this stuff can happen. This stuff can move really fast. I think right now, the cryptoverse is a big black eye. Every day I look at adoption. Every day I analyze all the other layer ones. I was actually watching Charles Hoskinson's video the other day, and I hope he's okay. He sounded really down and out. So hang in there, Charles. Shout out for me. We need to all respect each other and love each other in the space, even if we have different agreements on stuff. So realistically, conservatively, in the next bull market, at least an all-time high. Now, that is assuming one thing, that they get out of beta and they continue growing like they are growing, and everything continues to roll and rock like it does. So the fact, and this is based all on the premise, real simple. I got like many models, but if you take the market cap of Solana, should be worth at least a fifth that of Ethereum. Right now, it's a 15th. So that's a 3x right there. Solana was trading a week ago at $48, $49, and it fell all the way to $35. That's the volatility. 35 to 49 in 7 days is nuts. And it'll go right back. So once you get to 50, you can easily double to 100, and then you double to 200. So realistically, 250, worst case scenario. Next bull market, if, again, it's out of beta, they solve all the problems, and they continue to grow like they are growing. And that's the thing, is you have to, again, keep your tap dancing shoes on. If there comes a time when you see Solana daily active users fall, usage full, and everybody moves to some new chain that's out there, then it's time to switch gears. So you got to be ruthless in this game. You stay as long as there's adoption and growth, like anything else. For example, if Tesla stopped selling cars or got banned or whatever else, you move immediately to another asset. Now, next question from SoulStrider. Everybody is talking about the flippening as though ETH will replace Bitcoin. Why does it matter? If Tesla's market cap surpassed Apple's, it wouldn't change a thing. So what really changes if ETH flips Bitcoin? You're dead right. In fact, ETH and Bitcoin, they're all called cryptocurrencies. The name itself, cryptocurrency, is a stupid name because technically Bitcoin's a commodity. It's not a currency. So there's a lot of stupid things, and people look at stupid stuff like Bitcoin dominance. Bitcoin shouldn't even be in the same category with many of these altcoins. So I completely agree with you. But I think people just look at it as an important metric to identify where the money is flowing, like I always look at. Where the bees are going, which flowers are they looking to land on in that particular month, quarter, year, etc. So it's a good way to identify where the money's going. And people follow the money. I follow the money. So if, for example, imagine ETH POS is a huge success. It goes deflationary. It gets much more adoption. The layer 2 rollups work really well, and it becomes the chain that's used for everything. There's no doubt in my mind the market cap could very easily flip Bitcoin real fast, especially with the ESG narrative. There are the positives, but there's a lot of negatives that go along with that too. But I think SoulStrider, people just want to know where the money is going. And by the way, on a side note to your question, you mentioned Tesla and Apple. There's no doubt in my mind that Tesla will be the biggest market cap company on Earth in the next 3 to 5 years. Umar Bisir, and thoughts on move to earn. So I think move to earn for me is fascinating, but I didn't bite the bullet on StepIn because it was just too expensive to buy shoes, and looking at many different models and different people, I couldn't find a way to make it profitable. And I was concerned about everything else. But I think it's fascinating to find a way to gamify people being healthy, getting exercise, and earning money is fantastic. I think the whole space is a game changer. I've always tracked everything that I do. I've been using pedometers, Fitbits. I must have my 7th or 9th Fitbit at this stage, maybe even more. I track everything, got one on right now. And I think it's very important for people to be aware of their health, but to get paid doing it and play a game with others against it, to be able to get up there and move, is a great thing for society. So I am a huge believer. I just think the projects need to be a little better structured. And I think the step-in group and other move to earn plays are beginning to get better and better at doing that, and they're putting new partnerships together. I think Step-in just partnered with some soccer organization, Athleta or something like that. So very positive on the space. MATIC, there is a legitimate case to be made in the charts that we can see Bitcoin go as low as 10K or worse. You seem very confident that we won't get anywhere near those levels. Why? So, in fact, somebody asked me this morning a question. Is like, where do you see Bitcoin going on one of your favorite indicators over, I think it was over a weekly chart. And I said 8,000. So you can get a chart to tell you anything you want. But what I look at is adoption and supply. And I look at what the whales are doing, the smart money again. And again, going back to adoption, going back to Metcalfe's law, there's simply not enough stuff for this. Anybody, if Bitcoin survives the next 5 years, it's going to be a lot higher. There's no doubt in my mind. And it's going to be fantastic to watch because the supply is fixed and it's all about demand. And demand is all about users and adoption. And that's going parabolic. And the smart money is buying. You look at I covered, I think, in yesterday's video, maybe the day before, I don't remember. But the whales with over 100 Bitcoin to 10,000 Bitcoin have been buying hard since June, despite the drop. So with that, again, 10,000 would be so hard to get to. And the other thing you got to look at as well is the correlation with traditional markets. I remember a few slides ago, I talked about March 12th compared to March 18th. Bitcoin moves first. Okay. But at the same time, Bitcoin is correlated with risk on assets. So for Bitcoin to take a 50% haircut means the NASDAQ would take a 25 to 30% haircut, which would drag it down a lot from where it is right now. And I just don't see that happening. There's just too much cash in the system, too much cash on the sidelines. We'll see. I know a lot of people are talking about, I know Gareth Soloway thinks maybe 3,500. Definitely 12,000 has been his target for a long time. And I just can't see that happening. And I know we're in a weak spot. We did break 25K, got rejected hard, tanked right out of my range, which was, once it fell out of that channel, there was no floor beneath it. But it seems to be holding tough now around that 21.4 level, I think, last time I looked. Let's look now and see where we are. It'd be terrible if it's 21.5. Oh, it's gone up $130 since I looked at it last. So again, it's just look at the on-chain, look at the accumulation, look at what the smart money's doing, look at the news. I mean, I talked about BlackRock. I did 2 videos on them. The fact that they're getting in on the game and enabling people to buy, and that money hasn't started coming yet, but it's coming soon, real fast. Once that happens, again, this thing is just so scarce, it's so hard, and that's what makes me very excited. So 10K, chance to be a fine thing, but that's when I start selling things to buy Bitcoin. If we get anywhere near that, it's like, I'll look down the back of the couch. That'd be crazy. But I just think it's highly, highly unlikely, unless we get a massive black swan event. Heaven forbid somebody hits a button on a nuclear missile or whatever. All bets are off. Solana Llama, fair market value for MATIC for long-term hold based off on-chain metrics. So I do believe MATIC could easily go to $8. That's kind of like my 5-year target for MATIC right now from memory. And again, that's one that'll also go back to all-time highs and above, just like Solana in the next bull market. It's just the way I look at MATIC is MATIC kind of powers Ethereum to a large extent. It's the engine under it. Long-term holder, thank you, sir. Appreciate you and for the animals, kind sir. Jabba, good to see you, buddy. Likes, ladies, and let's smash the likes. Love you, IA, and of course, our darling Kate. Thank you so much, everybody, and thank you to the mods as well. Let's not forget T&D Tesla and Jeff Hammer and St. Jude Needs Us, Sir Winston, Solana Llama, Chadwick. Did I say Jeff Hammer again for the 3rd time today? Gooby, Artem, AC1, Cat with a K. Hope you're feeling good. Roses, Yasmin, Adrian Cardner, and Green Candle. I love the Green Candle meme where it spikes through the roof of the house. It's awesome stuff. So yeah, just want a final thought, everybody. Thank you so much again. Crypto is volatile. We know that. That's why we're in it. Big volatility, big return. nature of the beast. It's just a waiting game. So stack when you can. And I'll see you all tomorrow. Thanks all for being here. And thank you to the team behind me to make all this possible.